Chances of a coffee, my love?
Already on it.
It's already on. I love my job. I love my job. Well, hello. The coffee's on its way. So I think I better flip the screens on and earn some pay. Bloody hell, that almost rhymed for a Friday. And a warm welcome to one and all. And for those of you who not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. And I love me toys. I've got loads of toys, and it's nearly Christmas, so I better put my Christmas hat on. Because at Christmas time, you've got to wear your Christmas hat. Up talking to people with a hat on. What you got your hat on for?
Yeah, I'm off out.
You're off out?
Yeah, I'm going to see Grandad.
You're going to go see Grandad? Oh, okay.
Cool.
Grandad's a nutcase. So, takes one to know one. But thank you for the coffee. Love you very much. I love Christmas. It's getting really close. I love me coffee as well, because we all know Scruffy likes a coffee. And he likes the charts. Definitely does. He loves Wingy. Why do I like the charts? Well, because it gives me a lot of freedom. And it pays me at the end of the month. Which is the main reason that I like the charts, because it's my job. And do I love my job? Too right I do. I love my job every day. Some days it gets a little bit stressful, as trading does, you know, because a lot of the time trading is not so much the technicals, but the mind and how it plays havoc with your emotions. And once you've controlled that, the rest of it becomes pretty simple. So what I'm going to do is I'm going to break down the DAX, and it's really a salute to Volker, because he mentioned about it being a witching day today, and it is. It's kind of, sort of like, it's basically it's when the indices go mental. All right, a lot of positions closing out, all that sort of thing. Anyway, but just because that's on the horizon doesn't mean to say there's not opportunity. Because when you're day trading, you're not really looking at the bigger picture for an investment. You're looking very zoomed in for a trade in maybe the next 15 minutes to the next hour. And when there is big news events, the rule of thumb I use is I just don't trade them at all. I stay out. But you can trade up to the event, you can let the event happen, and then trade after the event. It's kind of the way that I look at things. And it's currently just after 10 in the morning, and I'm having a look at the DAX, and there's a reasonable opportunity to get in and out. Now, the DAX is one of those products that, if you're a day trader, is the gift that keeps giving. There's a few of them. There's the DAX, the Nasdaq, cable's pretty good, pound, JPY, oil, gold to a degree, but that basket, FTSE as well for that matter, but that sort of basket would probably see you okay. Just look at sort of like 4 or 5 markets, and you'll see certain criteria that you can pretty much find every single day, and at least one of them will present it, and that's where you make your money. So let's flick this over and we'll have a little look, because what I'm going to do is I'm going to kind of build this up in front of you and give you an idea of what some of the things that I look at. Now, if you looked at this straight away, this is a daily chart, and you'll think, oh, what's that going to do for the slice of bread? Well, it can do quite a bit. It can give you a good idea of sort of direction of market. We can see at the moment that there was a colossal drop. It clustered. It pushed back up. Couldn't really get any higher because in theory it should have come to the bottom of here, but it hasn't. And now it's rejecting again. So it's made its levels here. And this is pushing down. So is it reasonable to assume that there's another level here? Well, it's not a bad assumption, to be honest. So what we can do is we can put on just a basic moving average, just a standard moving average. Get rid of all of the bump, just like so. And we can have a look to see what actually is happening. Because how many times do you go into the market and you get it wrong? The second you press the button, you think, oh, this should be going up, but it's going down. Why? Everything says this. It's a lot of the time it's because, how do I put this? I think the best edge that you have is not knowing what someone else doesn't know. It's knowing what they do know. And then you're all playing on a level playing field. Okay? Because there's this great conspiracy theory that if I just had this hidden edge, you know, a special indicator with a super setting, I'll be great. You know, give me a strategy, I'll be fine, sort of thing. No, it doesn't quite work like that. The big boys look at the charts just the same as you do. The difference is they don't really look at a 5-minute chart. They look higher up, and it's just to do with the amount of money that they deal with and the way that those guys trade. You know, I'm talking about institutes here. Then you'll go down into sort of a proprietary firm, a prop firm. They might frame it down between a 4 and an hour. And that's where kind of they look, you know, and they're looking to get in and out throughout the day. And then you have the retail traders who are way down into a 5-minute chart. And the way to kind of succeed and win, if you like, is look at what the big boys are doing, but frame it down to your small time frame rather than going the other way. Because a lot of people just open up a 5-minute chart and go, that's where I'm starting. Oh, I think there's something there. And oh, the hourly might be doing this, or I might have drawn a line on the hourly. You're probably wrong. Whereas if you started at the top and work down, like a top-down analysis, so look at the daily, look at the 4-hour, look at the hourly, get an overall idea of what it is you're looking at. Then use the small time frames as fine-tuning. Probably find you make more money. So with that said, what is it I'm looking at here? Well, if I'm on a daily chart, the first thing that I would say is it's trading above the 20-day moving average. And for all it's moving downwards, as we can see here, it's actually respecting this quite well, and it's just touched it and it's pushing up. So my bias here would actually be to the long side based off the daily. All right, so that's the first takeaway that I would see. And if you want to kind of see how I really delve into this, because this is quite a watered version, come find me in the Scruffy Squad. You'll find the details in the description below. I pay a heavy emphasis on reading a chart, and that's why my hit rate is so good, because I've done my homework before I get into the trade itself. And I explain it to the guys, and like I was saying this morning, if you want a chart broken down, just ask me, and that's what I do for them. I will break a chart down, I will mark it up, do the full top-down analysis, and see, that's how I would trade this particular market. And if you're not into your day trading, you find my swing trading as well. And again, it's all pretty laid out, because charts will tell you everything you need to know. And you don't need massive amounts of indicators. I only use basic stuff. You know, I like an RSI. I like Bollinger Bands. Support and resistance. Candlesticks. Basic stuff. You know. And why? It's been around forever and it works. The difference is I know how to read it. Because if you just go in and go, well, that's overbought, I'm going to sell it. No, it's not quite that simple. You've got to know why it's overbought. Is it pushing into something? Has there been a spike in the market? Because if you get that, that will immediately tell any indicator it's oversold. Doesn't mean to say it's going to continue, because it did push up and you would have thought brilliant, but then it shot straight back down and would have probably took you out of the equation, because the traditional way is stick your stop under there. Well, that one would have took you out straight away, you know. So you've got to be prepared for that, and this is what chart reading's all about. All right, it's being prepared for what's about to come. Okay, so sorry, rambling. Get my coffee. Oh, it's Friday. You know, I'm looking forward to next week. I'm doing knack on. Well, I am. I'll potter about, but next week it's Christmas week, and I'm going to the pub nearly every day. Fantastic. And who says my work is never done? It's never done, actually. Right. Okay. Sorry. I never script any of this, you see. I just see something, whether it's on Discord or an email or whatever, and I just fire the camera up and away we go. Sorted. Right. So let me have a look at this. See what we're looking at. Right. We are above the 20. So that's the first thing. We are coming down the timelines. Now what can we see here? Well, there's a drive. It's pushed down. It's gone up. It's come back, and it's still hovering around here. Now, because the daily is telling me we're trading above it, these moving averages that we kind of seeing, because I'm only really got the 20 on here, is a point of attraction. So if I'm looking to the long side, is it reasonable to assume that I can enter with that as a target point? And why? Well, we can see here it's pushed down, but it's failing to get here. And why? Because look, there, it's just stalled. And where's it stalled? On the tops of this. So if I just drew in a little line here across the tops of there, just like so. Support and resistance, because support becomes resistance, resistance becomes support. You know, personally, to me, they're just an area of attraction, a magnet point. And what it is, it's pushed away. As it's come down, it goes to the magnet point. And if you push that right across, just like so, it's happened before. All right. So you kind of information you need is on the left hand side of the chart. You know, it's an echo of the past, and then your money's made on the right hand side. You know, a vision of the future. And that's what we're trying to do as traders all the time, is figure out what's going to happen on the right hand side based on what happened on the left hand side. So get rid of that. So I know this area can be a bounce point, all right? And this is on the 4 hourly. But this is where the nitty-gritty comes in. All right. We need to start working out some parameters, some arenas, if you like. You know, and I call them trading arenas. Why is that? Because it's it helps you focus the chart. So all I'm going to do is I'm just going to drop a line in here, like so, and there's another one up there. Right, so what do these represent? I framed it on the hourly. All right, I have a target point. My target point is this. All right, this 20 moving average. That's roughly where I think the market is going to try and come back to. All right, so that could just, if it's pushing down, move down. All right, so what we're looking at, there's a cluster point here. All right, so if that moved down, and I'm just assuming it's going to here to bounce. All right, so let's just give you an idea of something. All right, so just if you projected that down like so, all right, it's kind of giving you a rough idea of what's going on. All right, you can see that squeezing, and if it's there, and then it's going to come back into this rough idea. It's not a perfect way to look at a chart. I'm just kind of illustrating how you can use a moving average, extend it out, and how it can then become a point of attraction, a magnet point, because that's what the markets do. They come back to it. It's pushed away, it's tagged, so it's reasonable to say it's going to come down here somewhere. So that's what we're banking on. Right, so that's from the hourly. But I don't trade on the hourly. I trade further down. I trade on a 15 or a 5 minute. So what else can we see here that can give us an indication that this might pop up? Well, it's this big wick at the bottom, forced its way back up, which put the body in the top third. Yes, it was pushed back down again, but that's telling me there's a lot of buyers about. Okay, and I already know that because that's a sustained move down. And then you can see lots of green starting to come in. That tried to force its way down, but then the buyers came back, pushed it back up. The sellers are having another go, but that's kind of telling me that they're still here. All right. And then if you're working levels to levels, well, it's down here somewhere. We now need a reason to get in. Well, that's when you start coming a little bit further down, because we kind of mapped it out. I don't want it to go, that's like an upper point, lower point. This can be used as a target point, because if it's there and it's moving up, I bet you get some pips out of that. So let's have a look, see what's happening on the 15 minute. Don't need that 20 anymore, so we can get rid of that. Okay. Now we can see that move. But look at the size of that. That's lovely. You know, that's telling me there's a lot of buyers about. Why? It's excessive. That's pushing down, but is it getting down any further? Not particularly. All right. So what we can do now is we can look to start putting orders up into this line. Okay. Now, when you looked at it on the hour, it didn't look that big. But if you went in here and went to there, that's 43 to hit that. You know, if you coming off this one, right the way up there is 54. But even if it's a trajectory going that way to here, it's still a good 20, 30 pips maybe. There's a good opportunity here. So now what we do is we watch the candle, and I'm watching it very, very closely. So what I'm going to do is I'm going to look to get in on an opposing candle. All right. In other words, when it turns green. So you can see this, it's coming down, but look, there might be tails, but there's tails coming at the bottom, and that's forming. There's an opposing candle coming in. Interesting. Absolutely interesting. So let me just check something. Not quite. Okay, so still think that's got some ways to go, but let's have a quick look and see how far it is up to here. Well, measuring tool, just go off the top of these candles for now. That's a good trade by anybody's measure. So what we're going to do is we're going to look probably down here somewhere. So we're going to stage some orders in, and then 15, 20, 25, and we'll put them up to the top. Okay, so that's what we're going to try and do. All right, so I'm looking to buy the market. Now we don't need to go mad, so I'm just going to put £2 a position in. If I go just up to there, that'll be fine. And I want that on the base of there. Okay, so let me just alter that, put that there. Okay, so all I've done is I'm using this as a bounce point, and then I'm going to put a few orders in all the way down to there to strike up. Okay, and I'm going to space them out. Like so. Now what I'm doing here is order stacking. Okay. In other words, it's a single position broken up. Going backwards, so they're only £2, and then I'm going to put one down under here. Now I'm not expecting all of these to trigger. They might. Right, okay. So we're just going to put that one there, and then we're going to run that one there. Okay, and then I'm going to put a final one up here, all right, above it. Okay, right, kind of there-ish, right. Okay, so what have I done here? This is what's called a ladder trade. Okay, it's basing on the depth of the market. In other words, I'm expecting it to plunge down to move further back up. Okay, but in the meantime, pick an order up, pick an order up, pick an order up, and then get paid on the way up. Now this one that's out of the way is really just the wild card, okay, because the idea of this is to kind of trail with the price, and what I'm going to use it for is to get in and get out. You know, you often see me where I scale pricing, and what I mean by that is, or price bouncing rather, it's where it'll pick an order up, go maybe 5-10 pips, come back to the start, 5-10 pips, go back to the start. That's what I'm going to use that order for. Now I've kept the positions relatively small, and it's just so I can ladder them in. Very, very simple. And what happens is, if I went in this full hog here, I'm fully exposed. Nowhere to go with it, nothing. And this is a watered example of how to do things. But if it's here, well, it's a lot less. If I get in down here, again, it's a lot less. And that's what it's all about. Right, so that one's triggered. Don't need that one. So we will just carry on, let it pay me, and I'll keep putting the orders back in where they came from once I've cashed one out. All right, so I'll let it play out, and I'm just going to do this for maybe an hour or so and see how much we can get out of it. Okay guys, so that is that. Done it for an hour. It's starting to go red. Get out. Very, very simple. As you can see, it's pushing down. I would have give all those gains back. So what are the gains? Well, let's have a little look, see what we've done for an hour. So it's all of the £2 up to here. So let's have a quick ready reckoner, because my brain's not working that well today, boys and girls. Too much good living. Right. 1980 plus 2320 plus 40 plus 21 plus 2040 plus 1990. I can live with that. 144 in just on an hour. So what did you see me do? I mapped the chart. I showed where I thought the pain threshold was, which is here. The upper point up here, so it kind of gives me a range that I can work within. We were down in the bottom section of this, so if you were doing quarters theory forever, you would be working from this quarter up into the next quarter. Very, very simple. I used a moving average to find a trend line here to give me some upper targets. Now throughout the day it might work its way onto these. We don't know. But what is trading? Ask yourself that question. What is it? Well, it's just extracting money from the chart. It's not being a hero saying, I got in here and I held it all the way up. Yes, if you got in there and you held it all the way down, that is a fabulous trade, right? But how often does it happen? It waves. You know, this is a 5-minute chart. There. So, say you were trying to hold it. Oh, I don't know. Let's have a little look here. To give you an example of what I mean. Say you're getting in here and you're trying to hold here. So you've had all of this move, but this move gave everything you've made back before it decided to come back down. But if you are trading, you can catch that move, wait for it to come back, catch that move, wait for it to come back, catch that move, wait for it to come back, catch that move. All right? In other words, using opposing candles, a little bit like what you've just seen. Then you're working it the other way. You still believe it's going down, so you wait for this lot, down. You wait for this lot, down. So instead of sitting through God knows how many, well, that would have been quite a few hours of pain. You're just working the charts. But once you've got enough money out of the charts, why go through the stress? See, that's what trading is. If you're getting in at the top and waiting to get to the bottom, or vice versa, that's investing. It's not trading. And there's a bit of a difference. And I often see it where you have, like the wobbly trader on one thing and another. They go, oh, yeah, you don't move your stop. You don't take your profits out. You've got to wait. Do you? I never wait. You know, I get in, get some money, get out, and if I've got enough to be paid for the day, I am done. That's it. I'm not into this sort of sitting through hours upon hours of trades. I do it when I'm caught, but then I'm managing my way out of it as well, because I am trading back to where the original entry was, and in the meantime I'm taking money in and out all the time, and I'm building up a pot behind it. So if I do get caught and I lose, because trust me, I do lose and I do get smacked in the teeth, but it's not as bad as it looks, because I could sit on, say, £1,000 worth of loss, or it looks like £1,000 of loss, but I'm grabbing money, as you've just seen, moves up, 20-30 quid out, comes back, goes back up, get another 20-30 quid out, and you keep doing that throughout the day, grinding away at it, and suddenly you've got maybe 500 or 600 quid in a pot that you've built up while you're getting to this loss point, and suddenly this £1,000 loss that you think you have, it's actually only 4, because you've filled up the petrol tank a little bit. I hope that kind of makes sense. And a lot of the time you can actually build up a pot that's bigger than the loss, and then you just cut your losses, kill the trade, the pot pays off the loss, and your net result is 0. Scratch trade. These are things you need to think about if you're going to survive in trading. You know, X does not mark the spot, and there isn't a course that'll teach you that. Not one. You know, screen time, and maybe somebody sitting on your shoulder and just saying, look, this is how this works. This is what you need to look at. You know, because just reading a book or having a video course for an hour is not going to make you a professional trader. Experience is what you need. So I hope that one helped. It was just a quick one, really. Just kind of wanted to show you how managing a trade can work, and also how just basic chart reading is far better than any course. So there you go, guys. Anyway, it's Friday, weekend. I'm done for the day. I'm gonna have a jolly old time this weekend. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.